Everybody, it's Brian Shannon here from AlphaTrends.net. Today is Friday, the 2nd of February, 2018, and the market saw some pullback here the last 2 days after finishing with a real strong month of January. We did see that so far this week we've lost some pretty solid ground here. The volatility is creeping up as fear comes into this market, and let's take a look at the ETFs and see where we are and where we have the potential to go. We'll also take a look at Bitcoin, and I wanted to remind people that this Sunday is not only the Super Bowl, but is also the last day to participate in the Alpha Trends annual subscription sale. The gold level is typically $7.99 a year. It's $5.99 as of next Monday. That price will go up. So keep an eye on alphatrends.net for more information about that, or send an email to support@alphatrends.net. Today, the S&P 500 broke down pretty hard. Earlier in the week, we saw that it was trying to hold above this volume weighted average price from the 16th. We had then shifted our attention to the volume weighted average price from right here as potential band areas of support. And then I mentioned that I thought if it were broke below here, we would likely test the year-to-date VWAP. Well, we went much further than that, and this is why we don't trust rally attempts when we have a declining 5-day moving average. It can seem like it's down too much, and we look for levels to participate, but we don't participate until we actually see price action that indicates that's the proper course of action, and right now we don't have that. We've given up basically half of our gains for this year, a little more than half, close to 61.8%. So perhaps that's where we find some support on Monday. It seems as though you don't if we get a bounce on Monday, I would be highly suspicious of it. It seems likely that it would fail and continue lower, or maybe we'll just get a flush out on the open. But for now, I think that indecision is what reigns here, and you have to look at this market and say, we're experiencing a pullback. Perhaps it continues down towards that 50-day moving average even. If it did get down there, we would still be positive year to date in the S&P 500, which closed the year out of 2017 right down here. So, a pullback down to the 50-day moving average would be scary if you're heavily positioned in equities, but as a swing trading service, we're stopped out of all of ours. Actually, as of today, we did get stopped out of our PSTG, which we had purchased right over in here, and we've been riding it up till today as we got stopped out right underneath this level. Anyways, back to the S&P 500, the daily time frame. We are in a pullback mode, so just respect the pullback. Just as it was foolish to try to pick the top anywhere up in here, unless you were one of the liars who said they shorted up here, then it's just as futile an exercise to try to pick the low. Wait for the evidence. There's nothing wrong with having cash in your account waiting to deploy when the low risk, high probability sets up. And as I always say, risk management is job number one. It's not just a saying, it's something that you have to live and breathe in the market. For swing trades, you want to trade in the direction of the 5-day moving average. When we're under a declining 5-day moving average, it's guilty till proven innocent. It doesn't mean there aren't going to be bounces, but it does mean that they're not likely to hold, and that any bounce in here should be looked at highly skeptical, with a highly skeptical lens, that is. In the NASDAQ, I outlined this for subscribers the other day, thinking that maybe we could see a little bit of a rally up towards the 5-day moving average and then sell it short. Instead, of course, we broke down, and we are also below the year-to-date volume weighted average price in the NASDAQ. You can see that we got through that pretty handily here today. And as far as a retracement goes, from the year low to the year high, we're holding up better in the NASDAQ. And on the daily time frame, we are below the 20-day moving average. We've got the 50-day moving average down at about 160. Let's clear this mess up. Here's where we started the year for the NASDAQ. So we're up significantly still. And if we were to see a pullback down towards that 50-day moving average, it would not damage the uptrend. It would be a pullback from a a very strong uptrend. That's all it is. We're still in a longer term uptrend, and we're not just going to buy blindly into pullbacks. Buy the F and dip is one of the most foolish things I've heard. You don't buy on weakness, you buy after weakness has settled down and begins to move a little bit higher. As I like to say, you're better off being a little bit late and right rather than being early and wrong. The Russell 2000, as we know, has been a laggard. It's up just 0.91% this year. We do have a trend line here along with a rising 50-day moving average that are kind of coming together. And, we broke this prior band of resistance, which we didn't want to see happen today. But again, there was no reason to be a buyer. We don't buy at perceived levels of support unless we see that what we would have been looking for a purchase of the Russell 2000 would have been something more along the lines of this. If that 5-day moving average had a chance to flatten out and it wasn't extended as it made a higher high above that, then we would be looking to get long. Instead, being on the sidelines in cash is an enviable position right now, and that's exactly where we are. We're also, it's interesting to see that 50-day moving average and the trend line come together right here at the volume weighted average price from this deeper pullback low and where this most recent rally really began in mid-November. So it would also be appropriate, I think, to take a look at Fibonacci off of there and see that, we haven't quite pulled back 50% of that. So just another interesting bit of information. And these levels are just levels to be aware of. They're not levels to take action unless you see evidence on a shorter term time frame. I'll often point out, key areas, but it doesn't mean that's where you participate. It's where you anticipate and then wait for price confirmation before you put your hard money at risk, because otherwise you're just throwing your money away oftentimes. The semiconductors have broken the highs from last year, and that had been support. So now I think that you've got to look at the semis as a little bit skeptically. We're still in a longer term uptrend, but we're stretched, of course, and we are below a declining 5-day moving average. The range was tightening in here, and that's what this pattern is that I've drawn in. We saw the lower highs and the higher lows building energy within here, and we broke down through to the downside and are below the year-to-date volume weighted average price. So again, the volume weighted average price off of this December low ties right together with that 50-day moving average. I think that 102-ish is likely an area to look for the potential of support, but wait for price confirmation if you're going to actually participate. The biotechs pulled back here, and we were looking at this level as a potential area of support for a couple reasons. It was prior resistance. It was the 20-day moving average. It was the year-to-date volume weighted average price, but that doesn't mean we purchase there. Instead, we're still on the sidelines waiting to purchase the biotechs because they're in a downtrend below the declining 5-day moving average. There's no point in being early and losing money. So we're below the year-to-date volume weighted average price in the biotechs. That doesn't mean it's necessarily over. We could look at the volume weighted average price from this move and see that comes in maybe at about 111 is where we'll find support. But for now, and these are the levels that I update every single day for subscribers, for now we're going to stay away from the biotechs on the long side. Let's take a look at some cryptos. The Bitcoin here this week, today, in today's session, that is, overnight really, it came down to the rising 200-day moving average. This is also a level of significance because the range of last year, the entire range of last year, we can see that the low was down here at 752, I think was the low, and 19666 on this chart for the high. A two-thirds retracement brought it right down here, and that's also where we see the rising 200-day moving average. You can see this huge volume coming into this market as well. So I think that it's most likely, let's take a look at a 2-hour time frame. You can see that big volume in here on that big green volume came in here. So I think that for now that it's likely that Bitcoin has done what it's going to do for this pullback and most likely rally up towards about 10,000. We've got some price targets up there where we're looking to sell some for Alpha Trend subscribers. But the other thing I wanted to point out was on this chart I had mentioned a couple days ago in on Twitter that this area over in here. So what we saw was we saw the drive to new highs, got a little bit of volatility, and then it looked like it was breaking higher in here. From this failed breakout came this fast move lower with these multiple drives down. Well, 2 days ago I had mentioned that the Ethereum kind of looked the same. We had that drive to new highs, a little bit of volatility, looked like it was breaking higher, and from this failed breakout is coming a fast move lower. So I think that Ethereum is most likely also due to bouncing here a little bit. In fact, it's bounced harder than the Bitcoin has, but we want to look at it as that it's likely that these markets are going to continue lower. Not that, after this bounce that is. So if we get a bounce up towards maybe 10, 10, 5, I would think that it's likely that Bitcoin will continue lower. They are below a declining 10, 20, and 50-day moving average. These are just not the types of places to be buying unless maybe you're, one of these people who's just super bullish on the Bitcoin. For me, it's a pullback strategy at this point where we're buying on deep pullbacks and scaling out as it rallies, not trying to not be stuck with exposure from a longer term basis while it's in a decline mode as these cryptos are. Hope you have a good weekend and talk to you next week. Thank you.